people, let's quickly revise Ind AS 38 intangible asset with the help of our chart book. 1. Exclusion. So there are a few exclusions. 1. If you have any financial assets, that will get covered there. Any exploration assets, the goodwill that arises on business combination, or any intangible asset you are selling in the ordinary course of business. Okay, or if any intangible asset, if you are leased out, then leasing standard will apply. Correct? These are certain exclusions. Okay, then the definition. Intangible asset means it should have 3 characteristics. 1, it should be identifiable, non-monetary asset without physical substance. And when can you say it is identifiable? If you can separate it and sell it, or arises as part of contract or law. Goodwill fails this particular identifiability criteria. Hence, we don't recognize goodwill as per Ind AS 38. Okay. Then, non-monetary asset. Asset means it's an economic resource controlled by the entity from which they will get all the benefits and restrict others from getting the benefit. Okay. Your training cost, market share, customer loyalty and all, there is no control. Hence, it is not an asset. Intangible asset should be non-monetary asset, meaning that value, non-monetary means value fluctuates. So it should be a value fluctuating asset. So that's what that. All right. Then recognition criteria. The 2 recognition criteria for intangible asset is future economic benefits and cost measurement. FEB means increase in revenue, decrease in cost, and other indirect benefits are also considered. All right. Then initially, all intangible assets are measured at cost. The cost for this purpose is what? Purchase cost. If you have any import duty and other non-refundable taxes, add it. If there is any trade discounts, rebates and all, reduce it. Other than that, if you have any directly attributable cost to bring the intangible asset to the present management intended condition, that also you can add. Some of the example could be your employee cost, legal fees to register patent, etc., or testing charges, customization charges, etc. Okay. And amortization charges on intangible asset generally goes off to SPL. But if one intangible asset is used to produce another intangible asset, then this intangible asset amortization will not be transferred to SPL. Rather, it will be added to the cost of the asset. Remember, I gave you cricketing ball ka example. Software used to produce cricketing balls, that here. So even amortization could also be a DAC for another asset. In the example that I had given you, the software amortization was a DAC for inventory. That's the reason we added. Certain exclusions. This is same as PP ka. General administrative overhead, selling and distribution overheads, relocation cost, reorganization, redevelopment, abnormal loss, staff training cost, customer loyalty, market share, research phase expenditure. Yes. So your initial operating expenditures, initial operating losses, promotional expenditures, advertisement, etc. All these are your cost exclusions. Okay. Next. Subsequently, just like Ind AS 16, either intangible assets you can go for cost model or revaluation model. Cost model means just take the original cost, go on reducing depreciation. If there is any impairment, reduce impairment loss. Revaluation model means to show the asset at its fair value. Okay. But one condition is, if you are going for revaluation model, entire class of intangible assets should be revalued. Okay. So that is one criteria. Fine. So this and all is same. Deferred consideration. If you have purchased any intangible assets under deferred consideration, then you will record that intangible asset at cash price equivalent. The same treatment as PPE says. The difference between the transaction price and cash price equivalent will be transferred off to SPL over the contract duration. Exchange also same as PPE. Okay, as a thumb rule, exchange transaction we recorded at fair value. Fair value need not be used under 2 circumstances. 1, if the fair value of the asset given up and acquired if you cannot find out, or if the transaction lacks commercial substance. For transaction to lack commercial substance, entity-wise cash flow, asset-wise cash flow, both should be same. Then, if you have received any intangible asset as part of government grant, then 2 options are available. 1, both intangible asset and government grant. Both you can show it at fair value. Or you can show it at nominal value or concessional price. If you have received it at free of cost, show it at nominal value. Could be 1 rupee, 100 rupees, 1000, etc. If you have purchased intangible asset, or if you have got intangible asset as a government grant at a concessional value, at a discounted price, then record it at discounted price itself. Both you need to do that. All right. Then, if you have any internally generated intangible assets, they're broadly classified into goodwill and others. Goodwill, internally generated goodwill, you will not recognize. Okay. But the goodwill that arises as part of business combination. Okay, recognized as per Ind AS 103. They are not amortized, but they are tested for impairment. That's Ind AS 36 also says. We'll talk about that later. Okay, rather business combination also says. We'll see it later. Then other internally generated intangible assets are further subcategorized into research phase and development phase. Research phase expenditure goes off to P&L. Research is an activity undertaken to obtain knowledge. Research phase expenditure goes off to P&L because at the research phase, you cannot demonstrate two things. One, the very existence of intangible asset and how much FEB you will get. That's the reason. Okay. And once any intangible asset has been transferred to P&L, can you reverse it in the future year and recognize it and capitalize it? No. Once gone means gone. You cannot reverse it back. Development phase expenditure, can you capitalize? Yes, provided TIFRC is satisfied. T for your technical feasibility, I for intention to complete, A for ability to use or sell, F for future economic benefits, R for financial, technical and other resources, C for cost measurement. If all of them are satisfied, capitalize. Otherwise, even development expenditure goes off to P&L. Okay, cost model, revaluation model, we already discussed there. Okay, all right, the entire, the revaluation model the treatment is same as PP. Okay. Then, and one more thing, if any intangible asset, see, if you want to go for revaluation model, you need to have a fair value for it. Fair value, you get it from active market. If any intangible asset does not have does not have active market, then for such intangible asset, we only go for cost model. We cannot apply revaluation model. Okay, useful life. Useful life. If intangible asset has finite or limited useful life, we amortize it, provided DA is also positive. Depreciable amount is positive. If any intangible asset has indefinite or unlimited useful life, then we do not amortize such intangible asset. Rather, we only do it, or we check for it. We do an impairment check annually for such intangible asset or when the indication arises. So useful life of intangible asset is driven by few factors that I've called out over here. One, by usage of the product. Two, the product life cycle. Three, technological factors. Fourth is your industry standard. Fifth is your based on your competitor action. And then if intangible asset useful life can be based by other asset also. Okay, like I had given you example. Software 1 is used to produce software 2. If software 1 becomes outdated, software 2 also will become outdated. That's what we mean by that. Then useful life cannot exceed the contractual useful life cannot exceed the total life of intangible asset, but it could be shorter. We had given you an example. Yes or no? All right. Then if you have any renewable life, can you add renewable life? Yes, provided entity is reasonably certain that they will renew this. Okay, and how on what basis can you decode this factor? Check. If there is any conditions attached, then the entity should be reasonably sure that they will fulfill those conditions. And check the renewal cost. If the renewal cost is not significant when compared to the benefits that you are getting from intangible asset, then probably entity will go for renewal option. So renewal life, you can add it. If any third party consent is required, like government approval, etc., then entity renewing it should be reasonably certain that they will get this approval. Okay. And the renewal cost, if it is significant, generally the renewal cost will not be so much significant. If it is significant, then the standard is recommending you that, in fact, you have not renewed the original intangible asset, rather you have purchased a new intangible asset. So record it as new intangible asset, the renewal cost. Then, if you have acquired any intangible asset through business combination, then do not add the renewal life. Is a standard they've taken. All right. This we already discussed. Okay, intangible assets with indefinite useful life, they are not amortized, but only checked for impairment annually and when the indication arises. Okay, amortization. Amortization ka rules is same as PP. Its amortization starts from the day intangible asset is available for use. Okay. Can you amortize? And amortization is based on the pattern of economic benefits that you get from the asset. Based on that, you select the method. Can you amortize intangible asset based on revenue method? As a thumb rule, no. But if any intangible asset, if you can closely correlate, it closely correlates with the revenue. Okay, like I told you, you can use intangible asset till you achieve 1 crore revenue. In that case, intangible asset and revenue are highly correlated. In that case, revenue method of depreciation is acceptable. Then residual value. Normally, residual value of intangible asset, we assume it as 0, unless if any third party guarantee exists or there is active market for intangible asset, and you can find out residual value from that active market. 3, that active market should still be existent when the intangible asset ka end of useful life is reached. Till the intangible asset ka useful life, and then till the end of intangible asset ka useful life, that market should exist. Okay, any change in the useful life, residual value, depreciation method, etc., all these considered as accounting estimate change, and they have applied prospectively. Disposal is same as Ind AS 16. You'll dispose intangible asset or you'll de-recognize intangible asset when the FEB stops or when it is sold off. Okay, and any gain or loss on disposal gets transferred off to SPA. Okay, so this was your quick revision with respect to, if I want, if I can bring in one more called disclosure. Disclosure is one, opening balance to closing balance of intangible assets ka reconciliation you give it. Any impairment loss, if you have recognized that disclosure you give. Impairment loss ka reversal you give a disclosure. If you have done any revaluation, the date of revaluation, who did the revaluation, his assumption, how much did you get as revaluation surplus, you disclose. What depreciation method you have used, you disclose. How did you find out or how did you estimate the useful life? That disclosure you give, which is same as PPA had told you. Okay, and also if you have received any government grant, okay, give a disclosure of that as well. Okay, this was your quick revision of Ind AS 38 with the help of our charts. Thank you so much.